Hey everybody, it's me, Gregory Mannarino, back for my lovely, very lovely, post-market wrap-up on this Monday, July 9th, 2018. So, why am I overstressing lovely? Because frankly it was, and I want to talk about a few things that, are kind of disturbing. At the same time, it's, it just is what it is, and I'm going to attempt to answer a question that I get every single day of my freaking life, and that is, Greg, how long can this go on? Well, I'm going to try to put a perspective on some of that. Let's start off with this. Big rally on Wall Street today. The Dow Jones Industrial Average finished up about 320 points. All the major indices put on really nice gains. Now, this is why I'm stressing the lovely aspect of this. If you did catch the video that I did this morning, I explained to you at that time the Dow Jones Industrial Average was up about 180 points. I also explained to you that bonds were selling off at that time, and I said specifically that the sell-off in the bond market was muting the gains of the stock market. Well, this is the part where it really is just overwhelmingly unbelievable. What did they do? If you were watching the bond market chart, again, it's right on my website, traderschoice.net. You saw when they started to buy up those bonds yet again, and stocks vaulted higher on that. It's incredible. We had a 180-point gain initially with regard to the Dow. They start buying up those bonds, propping up that bond market yet again, and stocks just took off. This is the scenario. The dollar is also weak. You can see where this is going, where I've been explaining to you, again, the gift that keeps on giving off the Richter scale. There has to be a new scale invented, for this. This is just beyond. It really is. So metals put on a gain here. Cryptos got hit today. Again, I'm not surprised. You should not be surprised. I still own these things. I still hold Bitcoin, Litecoin, and Ethereum every day. I ask myself why. It's the truth. It's dead money right now. It's been dead for the longest time. But we'll see how that plays out. I don't know. Just asking myself again, why do I continue to do this? Because what I'm really good at, sincerely, is this. Trading this market. I really should pull that cash out. Well, you know what? I'm gonna shut up with regard to that. So let's answer the question here, people, as to how long can this go on. It's going to continue. As I've been explaining to you for a very long time, the mechanism here is to suppress rates, keep the dollar weak, deliberately keeping the environment of risk going so cash moves into the stock market. This will continue for as far as the eye can see. Are we going to get pullbacks here and there? Absolutely. But the trend for this market remains higher. I know I sound like the perma bull of all time because I've been explaining to you for a very long time. But it's just the truth. Now, with regard to when this is going, the charade here, and the charade is in the bond market. It's the biggest charade in the history of humanity. It's the truth. In the history of anything. And as long as they're getting in there and keeping rates suppressed, that's it. The market is going to continue higher because there's nowhere else to go. I can't stress that enough. They don't want you, and they're getting a lot of people out who I know of, believe it or not, that have been holding metals for quite a while. They're pushing them out. They're pushing people out of cryptocurrencies. You can't be in the dollar. You can't be in the euro. You got to be nuts. So the only place to go is in the stock market. You understand? So as long as they can keep this mechanism going, it's going to continue this way. Cash into the stock market, the gift that keeps on giving. Now, we all understand this yield curve is screaming at us all. Continues to flatten out. Federal Reserve has absolutely lost control because the bond market is doing the polar opposite of what they told us it would do and what they've been saying they would do. So the Fed is a non-event here. They don't matter anymore. The market is kind of run amok. Fed don't matter. And the Fed doesn't, I think the Federal Reserve, I don't even think they want to matter here. They want to make it seem like they're in control, talking about rate hikes, which you've been hearing about for the longest time, how the mainstream financial channels, keep pushing or kept pushing how we're in a rising rate environment. Well, we're not. We're in a falling rate environment. It's these same people. I want you to think about what I'm about to tell you. These same imbeciles. That's what I want. Look, I'm going to get a little nasty here. It's the truth. On these mainstream channels, these same cheerleaders are the same ones that were sitting in those seats at the top of 2008, not that long ago, when this market melted down, telling you that everything was just fine. You remember all that? Some of them were even there from the dot-com bubble, and they're still sitting there trying to sell you something. It's insane. How do these people still have a job? I don't know, because they're good script readers, or they're zombies. That's all they are. They've been zombified. They've sold their souls. That's the truth. Let me tell you something. If I ever, and they wouldn't do this, but if I ever got my way onto one of these mainstream shows, could you imagine what would happen? I mean, I have no idea. I would just tell it like it is, just like I do here. And they wouldn't know what to do with each other. They'd be like, they would not know what to do. I might even do that on mainstream television. But look, so the answer is very simple here. We are waiting for the yield curve to invert. It is going to invert. The Federal Reserve cannot normalize. Normalize. Think about that word. That means we're in an abnormal environment. They cannot normalize their balance sheet fast enough to prevent an inversion. I can't imagine a way that they can do it. Neither can they. So they understand the situation that they're in. Now, with that said, we are on inversion watch. When the yield curve inverts, market is still going to go up, in my opinion, for a certain amount of time. And then it's going to reverse. The bond market is going to be the signal here. The yield curve inversion is the signal here. And we're still going to be long this market, as far as I'm concerned, until we hit a critical mass with regard to that inversion and its relationship to risk. You understand? It's so simple. It's so simple. And then we're going to take advantage of that. It's so easy, and that's what we're going to do. Period. And I really hope, and I want to hear from more of you. How many of you out here are using the new tools on my website? I mean, I got a gauge there for you, which tells you what you should be doing. If you know how to read charts, you can correlate the charts with the gauge. You got a swing trading chart. You got a day trading chart, for which you can put in any symbol you like. You get the bond market chart. You got the dollar chart. What else do you need? So take advantage of this, and I want to hear from you. Is it working for you? And if it is, please take a percentage of that profit, donate it to a charity you believe in. I did very well in this market today, very well. And I will be donating a percentage of my profit, as I always do, to a charity I believe in. You all know that I support animal charities. That's the battle I have chosen to win. Okay? Pick your fight and win it. All right, with that said, I'm going to let you all go. I know this is kind of long-winded. See you in the morning.